This election, I think, is going to decide the fate of America and the fate of Western civilization.
And they tried to the next president of the United States. Enough was enough. And I said, let Trumpomania run wild, brother. Let Trumpomania rule again. Let Trumpomania make America great again.
If you try to kill our citizens, we will kill you. If you spill a drop of American blood, we will spill a gallon of yours.
If you come back, we're going to kill you. We're going to give you the death penalty or kill you.
The fact is, and I'll say it now, you have to get him the hell out. You have to get him out. We will make America great again.
I'm in the charts all day. My goal is to make you money. I provide the information required to know exactly when to enter. I don't give this blanket statement, buy the breakout, buy the retest. Join me every single day, 3 p.m. Eastern Standard Time, to understand the who, what, where, when, and especially the why when it comes to trading. This is why the coin's dumping. Every 7 days, it's releasing tokens. All right, guys, doing a mic check. Mic check looks good. We got a busy day today. We got a really busy day today. Of course, the video will start in just a moment. Here we go. 3, 2, 1. Bingo and a bango. Where's the bingo bangos? Give me some bingo bangos in the chat. A bingo bango. Good morning, good afternoon, good evening. Welcome back to Trade Intuition, where we show you how to successfully trade without all the complicated terms, pattern memorization. We show you how to actually kind of understand the charts. Make sure my mic is good. If my mic, of course, goes to mute, well, let me know. All right. So we have a lot of stuff today, guys. A lot of stuff. Arrow is doing really nice. Of course, we are in this one. I believe we gave this one on YouTube and also, of course, the VIP chart. There's a few that are up and a few that are down. We're going to go over those in just a moment. Give me charts, guys. Give me charts. Today is going to be a jam-packed day. Let's get started. Right now, liquidations, shorts are getting wrecked, absolutely pummeled. Now, in my opinion, I think it's time for Bitcoin to retrace. We're going to go over Bitcoin in just a moment. We do have the FOMC meeting happening as far as the results. They should have been out just a few minutes ago. And then, of course, we do have Powell speaking in about 30 minutes. So we will be checking that out as well. Once again, busy day today, guys. Shorts getting annihilated. Now, of course, with this, we do see that coins are going up and down, up and down. If you missed the move, don't worry, guys. Don't worry. The prices are going to come down. Don't FOMO. Yesterday, I was stressing that really, really bad. Well, not a bad, but a lot to the VIP group. You know, yes, we see a lot of coins moving. We're already in coins. Be happy for the gains that we have. The one thing that you don't want to do is you don't want to be envious. You don't want to be jealous. You don't want to have that fear of missing out. Oh, well, let me jump into this one. It's gone up 40%. You know, everybody's making money on this one. This other group did this and this and this. No, that's the last thing you want to do, because then you jump ship, and then what happens? Our coins start moving as well. Be happy for what you have. You're going to make money. You're going to make so much money this bull run. It's going to be crazy, guys. Crazy. All right. Let's see here. So the shorts are getting liquidated. I'm not going to go over this. You can read this. Again, we are pressed on time. We are really pressed on time. So in reference to the fear and greed, and now that I'm blinded, extreme last week, extreme greed, 77% or 77. Yesterday, and for the past few days, I thought this thing was broken. It was at 70. Now it's finally extreme greed. What happens with extreme greed? That's when we sell. That's when the retail, which is us, of course, too. But we're smarter than the retail. We're smarter than the new people coming in because we've already experienced all this. This is when we sell. This is when they buy. You know, they don't want to buy Bitcoin at 15K, 30K, 50K, 60K. No, why? When it hits 77, that's when they're buying. So just kind of give you a heads up on that. Really quick news that I want to bring up just very, very fast. We're not going to read any of this stuff. We're just going to go through it really quick. So let's see here. The election delivers a big win for crypto. I had all this highlighted. What happened? Oh, upsets. So this was all highlighted. This is, of course, the election delivers blah, blah, etc., etc. So with here, we did see Bitcoin surging to 75. Now I can highlight it. Thank you. Oh my gosh, I'm so upset. I had all this highlighted, guys, before that. Anyway, so it did go up, and it's going up even higher. Going up even higher. So let's see here. What else did I have highlighted? Of course, Gary Gensler. Hot seat, Gary Gensler, watch out. You know, now granted, with the Republican Party now holding a majority, this is so important, guys. You have no idea how important this is. In the Senate, the Trump stance on crypto is good, and everybody in there is for, well, not everybody, but the majority is for crypto. We went over this on earlier show today with Crypto Coin Mindset. I was on his show today. Normally I'm on there on Monday mornings, but today he did a special. Basically, what does this election mean with this new president, you know, Trump, for what does it mean for crypto? So we went over that. Definitely check that out. Of course, always have the smash the like, leave a comment, let them know I sent you. Let's see here. Dylan says Piper Academy told us told his top 3 coins in the last live. Didn't know if you've seen it. No, I didn't. I missed that part. If you have any thoughts on them, by the way, what are they? Oh, I didn't put it up here. So Piper Academy told his top 3 in the last live. Didn't know if you've seen it. No, I missed that one, man. I literally the past few nights I've been staying up all night trying to just keep the group updated. Not only that, but to see what the market's doing, so that I could post right away in reference to possible entries or moving stop losses or what have you. Let's see if you did any thoughts on them by any chance. Give me a list. Give me a list of them, and let's see here. We'll write them down and ask tomorrow. Okay, cool. Yeah, then if you want, we can also do kind of my list. I like doing a list every so many weeks. They change, you know, as far as what I like at the moment. So moving on. So of course we did have several crypto coins that did rally, a lot of them double digits, which is good. Now granted, they are going to come down. Some of them 50%. There's one that I'm looking at for entry, and I even made a video. I made 2 videos, a video yesterday in reference to Bitcoin and the market, coins that were in, coins that were not in, and then a few hours later I did a follow-up on that video in reference to some that I really want to enter, but I can't because they moved up so much. This is one of them. I'm giving you a sneak peek right here, guys. Keep an eye on this one. LDO. This one went up 50% in the past day or two. But I can't enter it right now because the odds of it coming down are much greater than it continuing to go up. Could it continue to go up? Yes. However, the odds are against me as far as, you know, entry now. All right. Let's see here. Going down the list. What else did I want to show? Oh yeah, of course this one. I see here. It's just basically saying as far as the iShares Bitcoin Trust gets the Trump bump, you know, everything's going up. Everything is going up. However, if you are not in a trade already, do not FOMO. Prices will come down. So don't worry, guys. Don't worry. Trump victory paves the way for a $100,000 Bitcoin. Possible by the end of 2024? Possible right now. I mean, shoot. We're just rocking and rolling. Here, additionally, with the market cap of stablecoins hitting a new time high. So with stablecoins, those are, I thought I had it here. It's a USDT and USDC. Those are basically, you know, there's a lot of money being put in here, and we have record highs. Let's see here, and we'll just continue on. I had all this, man, I'm really upset. I spent time and effort. Why would it undo? I don't understand. I'm trying to see if maybe if I had it on another tab open. No. But anyway, crypto payments are getting easier and easier to use. This is what we want. This is what we need for crypto adoption. Here it is. So this, see how it changed the color? This is from my other, this is what I had, but it's not, nothing else is showing up. All right, I'm gonna install this thing. It got me very upset. Anyway, this is just saying that it's getting easier and easier for payments to be accepted with crypto. So I mean, this is good. This is kind of like Apple Pay, Google Pay. So this is going to be the next thing that we're working on. Of course, we've been doing this for a while now. It's just getting easier and easier. All right. With that being said, we do have the, why is this so small? This, oh, okay, this is 100% right here. All right, so at 2 o'clock, we have the federal funds rate, and projection was 4.75. It is 4.75. So what does this mean? You click here on this little star. Let me go ahead and put this in the chat. I normally do put this in the chat, you know, because I want you to know what I know. My goal is to make trading warriors. I don't want sheep. I want trading warriors. So if I'm getting super busy, I'm looking at charts, I'm doing research, I'm doing fundamental, technical, you know, just tokenomics, and you're like, Joe, we have the FOMC meeting next week. The projection is this, you know, if this and this happens, this is what it means. If this and this happens, this is what it means. You know, just be a lookout for it. It's like, oh, dude, man, thanks. I've been so busy, I completely forgot that it was next week already. Let me go ahead and, you know, notify the group. This is what I want. This is my goal. And already, like, we have some really nice trading warriors in the group already, in the VIP group. And of course, you know, they're doing updates on Bitcoin. They're doing updates on the market. They're doing the really nice stuff as far as different ways of thinking about Bitcoin. You know, whether it's the moon, whether it's fib retracement, whether it's fib, you know, different fib levels. It's a lot of really great information in there. But moving on to this, we do have the FOMC press conference at 2:30. At 2:30. So that's roughly in about 20 minutes. Hopefully we can get everything squared away. One thing I recommend doing is click on this folder, and it's going to bring up some information. Why is this important? Why traders care? Short-term interest rates are the paramount factor in current valuation. So what this means is if the interest rates increase, well then, you know, it will affect the market. If it decreases, it will affect the market. If it increases by a lot, it's definitely going to affect the market. So traders look at most other indicators merely to predict how traders. Now, one thing that I would recommend is definite, and I still don't, man, I'm such a procrastinator. I still don't have it on my stuff, but what I'm going to do right now is send you to my buddy, Piper Academy. Piper Academy. This guy's an absolute beast when it comes to, here we go. So I have it now. So let me put in this. So definitely go to Piper Academy. This guy, every day, Monday through Friday, 9:30 a.m. Eastern Standard Time, he goes over the market. I strongly recommend you check him out. He's very informative, very smart, breaks it down in a very easy way to understand. And if you don't understand, well, then just ask him, what does this mean? Now, of course, they have a very early morning show. I think that's at 6:30 a.m. Eastern Standard Time. And that is Good Morning Crypto. And then, of course, they have the nightcap as well. So this channel is one that you definitely, if you don't know about this channel, check it out. You will be very surprised. All right, moving on. All right, so let's get to crypto. Good Lord. Bitcoin is just going nuts. Bitcoin is going nuts right now. Absolutely nuts. Okay, all-time high. Awesome, great. Well, all-time high. I think that was the all-time high. I forget where it was at. Oh, this was Orange Man. So 73. Let's just come back over here just so we can verify. So the all-time high that was set in March was right up here. This is Orange Man, 73794. So we can just call it 73.8. Now, because we had the election, you know, it came in this. I'm so glad that we entered charts prior to the election for the group. And when Bitcoin started doing this number, altcoin started doing this number. Now, one thing that I did not do, and I won't do, is post 15, 20 charts a day, because then, yes, you know, we would have had 60 plus charts that did really well, but I would have posted like 100. Right? Now, who wants that? I don't want that. None of my members want that. If you want that, great. There are plenty of VIP groups you can join. If you only want a few charts that are going to make you money, potentially, come join us. Come join us. Speaking about that, I do, oops, where is it? I do have this right here. So Cryptos Are Us put out a tweet last night, and man, I love it when different people have different thought process, but we get to the same area. So here, this is a free, and I'll go ahead and put this in the chat as well. If you haven't watched this, guys, you need to watch it. Like, it's very important that you watch this, and it's free. And I put it here so that it doesn't get lost in all my other videos of YouTube. I give you historical key moments of Bitcoin. Not only that, but we're in accumulation. We're about to break out of accumulation. I give you the price percentage of the range that we're going to be going into potentially, along with the duration, how long we're going to be in that sideways accumulation before moon mission. And this is free. I have a lot of free stuff on Patreon, so definitely go there. Every Sunday I post different things. Here I do have market structure. This right here is going to save you a lot of time, a lot of money, a lot of energy. The biggest thing is time. Like, I could charge $999 with this, and it would still, in my opinion, be fair, because not only does it cover not only my interpretation of market structure, but 2 other instructors as well. But I break it down so easy, and I don't have a 5 or 7 hour course for you to watch. It's 1 hour, and I include PDFs, which the other instructors didn't include, to where you had to listen to what they're saying and get all the little bits and pieces and make your own notes. And then say you miss something, you have to watch it again, 5 to 7 hours. Oh, and get these little bits and pieces and then put it together. And then so now you have an outline of the rules to apply. Here, I do all that for you. I actually have on the video a warning sign, in addition to me saying, guys, this is very important. You must do, because if you don't have the foundation, all this doesn't make sense. You have to do X, Y, and Z. This has to happen in order for you to do this. I have the indicator on the screen. I tell you it's very important. And I have a PDF that breaks everything down for you. So this right here, huge value, and not even the money part, just the time. For me, I would rather spend $1,000 to get something for an hour versus $200 and get something that's going to take 24, 36 hours. That's just me. My time is, and I'm sure your time is also very important. That's the only thing we can't do is our time. You know, so if you have kids, guys, spend time with your kids too. They're not going to remember you working overtime and working all this other stuff. They're going to remember all the times you tickled them, all the times you played hide and seek, all the times you had an ice cream date with them. They're going to remember those times. So time is very valuable, in my opinion. All right, moving on. Bitcoin. Is it time to buy? No. Not time to buy. This is when retail buys. This is when the non-experienced people buy. We have to wait. We have to wait for a retracement. Now, I was calling for a retracement. Well, shoot, I've been calling since we broke the all-time high. Orange Man, he spoke, and Orange Man won. It went up, came down. Okay, cool. Let's see if it continues coming down. Sure didn't. It ended up getting strength. Came up, lower high. Okay, now we're going to come down. Did we break this bottom? Nope. Came up. Did we break this top? Yep. A lot of buying pressure and selling pressure wicks. So buying pressure, selling pressure. Came up, broke the high, continued up, coming down. Okay, now we're coming down. We have to do this level by level. Level by level. I'm gonna get to your chat in just a second, guys. We have to do it level by level. Came down, found support here, went sideways, broke support, now we come down. I know it has to come down. Nope. Going up, broke this level, continued up, broke this level, and now created a new all-time high. We are making all-time highs left and right. Now, does this mean that it's up only? Nope. Could it be FOMO City right now? Yep. So right now, you know, if you want to get into a trade, let me know what coins you're looking at. I will let you know when the safer entry is. Could we do aggressive entries? Yeah, sure. Why not? But just know that when this comes down, it will come down nice and hard. Look at this area right here. Look at this area was good. Let's go to a higher time frame, 12 hour. Do I think it's going to come all the way down to the weekly strong low at 52.5? No, definitely not. But it would be healthy. It would be healthy for us to see something like, I don't like how this looks. Let me hide this stuff because I don't like how this looks. I want it nice and clean, nice and clean. Okay. So for me personally, there's a couple different ways that I can see it going. One, I would like to see it come down to at least here before coming up, breaking it again, and then coming down to about here. And then hopefully we don't see anything less than this. Hopefully. So if we don't see anything less than 60, that would be great. That would be just great. Of course, you know, and by doing this, we're liquidating all the shorts, which you can see, we showed that earlier in the screen, all the shorts being liquidated. And then now, you know, it's coming up. Once we dump, all the longs will be liquidated, all the shorts will be liquidated, all the longs will be liquidated, all the shorts open up. And then now we start doing this. This is what we want. We want to see a retracement about 35 to maybe 50%. I don't think we'll see 50%, but we'll see 35s. If we start seeing 15%, for example, it comes up, comes down a little bit, comes up, comes down a little bit, comes up. When it does come down, it's going to come down nice and hard. So just give you a heads up. All right, moving on. Let's go on with the chat. Again, we got a lot to cover, guys. A lot to cover. Let's go ahead and put this back. Let's see here. Going with the chats. Going with the chat. Okay. Let's see here. Looks like Manuel wants to do a little bit of leverage trading. Leverage FOMC trading. I'm down. I am down for that. Let's scalp together, brother. Let's scalp together. I see Manuel says, Joe, you're the man, Joe. And the only one with the cojones to speak your thoughts on the election without fear. I think I'm just dumb. I really do. I think I'm just dumb. Everyone else danced around it until after. Yeah. No, I talk about, now granted, because I talk about it, you know, they can ban me. They ban me, I open another channel. You know, make sure to follow me on Twitter, because that way if I do, then we can just hop on over there. See here. Dylan says, Joe, how you doing? Doing good, my friend. Life is good. Crypto is good. Life plus crypto, amazing. Let's see here. Going down the list. Let's see here, going down the list, going down the list. Okay, 1 second. Almost done with the chats. Let's see here. Dylan says, just checked for Piper Academy. His list of altcoins is Ondo. Oh, Ondo. I love Ondo. Absolutely love Ondo. Oh, guys, if you want to check for news and stuff, so when you hit the plus sign, this is the desktop version. When you hit the plus sign, it opens this up where you can check, you know, go to your different layouts. It also has different screeners. You have calendars, you have news, you have heat maps, you have options, you have markets, you have community. Trading View, absolute beast. Okay, that's all I want to say about that. So let's go to let's go to a YouTube layout. So we're gonna do, so I love Ondo Finance or Hondo Finance. Ethereum's gonna do well. I don't like Ethereum per se, but a lot of the meme coins on Ethereum. However, there's a lot of meme coins on Solana. I think Solana's gonna do it. Solana, Jupiter, Radium. Those are the top dexes on Solana. Radium right now, it's just kicking butt. I've been trying to get into this one, but it's just taking off. There's no pullback. I mean, it pulls back very, very little. All right, moving on. Yes, SUI, definitely agree with that one, 100%. And Chainlink, yes. Matter of fact, I was looking at Chainlink today. It's a really nice accumulation. It's just underneath another zone of accumulation. I do think that Chainlink is definitely a great buy. Ooh, there's thunder. Guys, right now, it's nice. It's 77 degrees outside. It's kind of humid a little bit. It's very dark outside. Very dark outside. No wind right now. It's been raining or off and on, drizzle, rain all day today. It's been pretty crazy. It feels good. I love it. I love this weather. Man, give me this weather all day. It's a day where you just kind of kick back. I don't have, well, I do have popcorn, but it's not the theater popcorn. But anyway, I have popcorn. It's a nice day just to watch some movies. You know, be in some trades, no stress. So yeah, okay. What else? See, are your thoughts similar? Yeah. Yeah. No, I love Ondo. I love Ethereum. So Ethereum, I think, of course, 2 to 3x easy. Ondo, we'll just look at it. Let's just look at it. Let's do them really fast. We have 6 minutes before the meeting. I do want to check in on that. So we're going to look at that together. So this is YouTube. This is Ondo USDT.P. So MEXC. And Ondo's ready. Ondo is so ready. See, but this pump though, how much was that? The past 2 days, 30%, which is not too bad. And then of course you have to go and you have to look at the market cap for Ondo. And this one's a pretty nice market cap. It's a 1 billion market cap. And because of that, that means that this isn't going to move like, 40% in one day. This just means that it's going to do fairly nice, over time. Now, of course, with it being over time, this is a real world asset, and it's on everybody's radar. Now, because of this, we do have this zone. We actually have 2 zones. So let me go ahead and draw this out for you. This, in my opinion, very nice coin to get. Right now, it's in the middle of this zone. So here we did mention this on YouTube. We said, have your alert set right here. When the 4-hour candle closes above this level, you enter the trade. 4-hour candle must close above the level. And then, of course, have a lower bid here, just in case. Have your stop loss down here. That's what all this means. Let's go to a 4-hour time frame. And we can see that it did have a nice little run up, 20-something%. It is right in the middle. My thought process is the same. 4-hour candle close here. Have a lower bid here, stop loss here. Perfect setup, nice mid to long-term hold if you like. And I believe that this one's going to do minimum 3x, minimum. Even though it's a 1 billion market cap, that's what I think it's going to do. Just because it has so much backing behind it. And of course, it's a real, not this one, YouTube Rabbit Fund. It's a real world asset. Ethereum, we won't look at that one. We will look at SUI. DUI. I can put it again. Oh man, is that foreshadowing something? What's going on, guys? Help me out. Who's got bail money, guys? Who's got bail money? Let's see here. Oof. So this one, it's gone up so much. Literally, it's gone up so much. Let's go to a higher time frame, 8-hour. The reason I'm going to a higher time frame is to get rid of all of this ups and downs. So it looks great. It looks great. I would love to see it come back down here. So this is the pull for the trend. So this is the pull for the trend. If we wanted to just see the current, let's go ahead and delete this. If we wanted to see just the current price action for the what am I trying to say? For the current trend, what we could do, we can go to these parallel lines, go from here, make sure it's parallel, and then here. Right now it's currently breaking above it. Tried before, candle did close above it. There's an 8-hour time frame. Let's go to a 4-hour time frame. Let's get rid of this and this. Not only that, but let's go ahead and pull out our fib retracement. Let's go to, I guess we can do the wick, since we have the wick right there. And let's do this. Excuse me, I should have muted. Sorry. Okay, so looking at this. So this part right here doesn't count. Let's go ahead and make it official. Let's make it official. Okay. So this is what we're looking at. We're looking at from this pool. Looking at from this pool to this. We can't go backwards. We have to go from left to right, just like how you read, left to right. So if price came down, came back up, made this trend official because it went to the 50% mark, traveled here for a little bit, came down, didn't come back down here, which is good. That's a healthy sign. Broke above this level, which is good. Continued coming up. I would like to see it come back down one more time. I don't think we will, though, especially with all the bullishness in the current state. For us to come down here, and I would love here before it goes up. But right now, I wouldn't enter because we have a really nice high probability that it could come down for when it's at the high. However, we have to take into account of the market. For the market, we do see that it could continue going up because everything's so bullish. But this one, I do like it quite a bit. This one is also a very, I mean, it's not a very high market cap, but it is a higher market cap coin. It's nothing like, 200% or 200 million. For this one, it's a 6.7 billion market cap. So this one is also a nice big market cap. And of course, with this one, it has several different things for this. It's 230, guys. It's 230. For this one, I'll just go ahead and do all this, but this is a layer 1 as well. Normally, I don't put all this junk on here, but normally it's a layer 1. I'll just do it right now. And it's a Coinbase Ventures, but layer 1. We'll just do this. Relate this. Bring this over here. All right. All right, guys. Hold on. Let me know if you can hear this. Let me know if you can hear this. They're not saying nothing right now. So let me know if you can hear it.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased
Not as tight.
significantly over
It's
the
been
past
4
2
years, guys. 4 years.
Total
We're getting better.
PCE
4 years.
prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. Considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
The best part, all those same questions.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
It's you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision.
It's always about that data. Never has the data. Never has it. I don't think there's been one time where he's had the data. But yeah, guys, got the data. Here he goes.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, and we're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that again, we didn't update the SEP, so I'm not going to characterize where the committee would be.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And, saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines. So we'd start to model it. And then we'd wait. And then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that. And then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So we have a very large economy. Many things are affecting it at any given time, And, a law change of some kind would go in there, but it would go in, but it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration.
So for this one right here, for Brett, let me turn this down a little bit. So for Brett, this one, we had our level right here. We mentioned to set an alert at this level on the 4-hour time frame. If we have a 4-hour candle close above this level, then of course, that's when we can enter the trade. So if you did that, then of course you would have been in trade somewhere around here, and then now it would come up, come back down, come up. Very important to set your alert. So I wonder if I could put captions. There you go. So you can still see that, kind of barely hear it, I'm guessing. And then of course, hear me. So for this one, I mean, I like it. It's at the beginning of the possible uptrend. Do I think that this will do well? Yes, of course. It's a meme coin. Right now, it hasn't changed direction though. So right now we have high, lower high, lower high, and then a lower high. In order for us to change direction, so entering right now, higher risk. It would need to break this level. So let's say we did enter right now, and then it came down to doing this number. We could come down to a lower low. So with that being said, looking at this now, long term, this is a great setup. Long term, I like it. Coming down, we enter here. More than likely, we break this level, et cetera, et cetera. Looks like this is the bottom. But as far as just like, I like it. I'm trying to think of. Oh, you always want to do reasons why you like it and why you don't. I like it because it's coming out of this, and we're gonna safer entry. Of course, is way up here, and that's just ridiculous. I like it. So this will be my setup. Really tight stop loss. And then if we get stopped out and it comes back in, well then same thing, you have to now set your alert above this level. And then you just try it again. So I do like it. Who's in here, guys? Who's in here? Put a 1 in the chat. Let me know you're here. Put a 1 in the chat. Let me know you're here. Let's see here. Going down the list. Clay the Great's here. What's up, Clay the Great? Appreciate you, man, being here. Hey, smash the like. Stay safe out there, y'all. Yeah, definitely, guys. Stay safe. Don't force these. Like, when you see this, don't jump in it because it's going to come down. There's a lot. Here. All right. So, Gala. I'm looking at Gala. I'm very tempted to put this one in the VIP, but I don't know. It's ninth. It's a gaming coin, low market cap, 766 million. It's in this trading range, which is really good. And it had a decent move, 20-something%. We do have bearish divergence down here. So we have a high, higher high. However, we have a high and, oh no, wait, there's no divergence. I thought I saw a divergence. So no divergence, just plain. Let's see here. I don't know, I just feel like we missed a lot of that move. I would like to see it retrace. At least a little bit. To our stop loss. And then start coming up. To me, it moved too much already. Look at this, all this move. Could it continue going up? Yep. Because of the because, oh, one second. Where's my audio? Oh, here it is. Oh, y'all can't even hear it at all.
You'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really
Oh, that's one thing I thought. It moved too much, in my opinion.
we expect
to enter it now.
there to be bumps. Example, you know, the last 3 months of last year, core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, you know, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact.
I'm not a smart man, but I do know that the cause of inflation is from them printing more dollars, reducing the value of the dollar, which creates stuff to be at a higher price. Metal, steel, wood. Because of that, everything that requires that, whether you're building a house or just anything, it makes the materials go up in price, which makes the price go up for the consumer, which makes the consumer spending more money. So the dollar's not going far enough, or what it used to. I'm not smart, guys. I am not smart at all. But yet I know that the inflation could be easily solved by not spending as much and then cutting down all these government jobs that are useless. That's my thought process.
Powell,
let me know
Craig
yours,
Torres
guys.
from
Let me know
Bloomberg.
yours in the chat.
2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question.
Ooh,
I want to talk about some labor market
burn.
indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and so one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly. from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You know, you mentioned a bunch of indicators, and you're right. You know, the openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, you know, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, you know, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But, you know, it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained. But overall,
I just think it's crazy.
Market, we could talk about
I just think it's super crazy. Everything they're doing. All right, so Brett. So let's go back to Gala. So Gala, I mean, I like it. It's in this nice range. We do have a high, lower high. So, I mean, we could do another lower high here. To me, it just moved too much. There's a lot that have already moved.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave,
He should resign.
can you follow up on? Do you think that legally you're not required to leave?
No.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you.
Wages, you know, the
Would you go
from here? We don't think we need that to happen to get inflation back
So
to
I
2%.
rewound it, guys. I rewound it.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on? Do you think that legally you're not required to leave?
No.
No. No.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their world. Whereas 2 years ago, it was all they were talking about. So they feel like.
So here's one of them where I've been waiting for a pullback. I saw this nice retracement here, or saw it here. It's like, all right, well, it moved already. Hopefully it'll come down. And this one I'm looking at Bitcoin. It was at the all-time high, or right at the all-time high. So good chance that it pull back. Well, it didn't. Came up some more, retraced a little bit, but I want to see more of a retrace, because when it does come down, it's going to come down nice and hard. Then it came up some more, and then some more, and a little small retrace. So this, to me, I already missed it. The group already missed it. It's okay because it will come down. It will come down, and then we can enter the trade. Because I don't want to enter a trade now, and then it come down. Possibly we get stopped out, and then we re-enter the trade once it stabilizes and then breaks the level. So I don't want to do that. So I'm just kind of letting you know there are going to be times where we're looking at coins. For example, this one right here, it looks good. It just went up too fast. If it would have done this, if it would have come up, come down, come up, come down, come up, come down, come up, come down, come up. Now it's breaking this level. Bingo, bango. But because it went straight up,
now that can change through the price
Won't
of
do
oil or otherwise.
could it continue going up? Yes, 100%. We have a lot of FOMO right now. A lot of FOMO. Look, another all-time high.
But ultimately,
Another
if you
all-time
look at
high.
the U.S. economy,
If you're in a coin right now, great.
has been very good.
Keep it up.
And
If you're not in a coin,
that's what we hear from
then
business
I would
people, and
strongly
expectation that
recommend
will continue. If
just
anything,
dang
people
it.
feel
Then just
next
wait.
year,
I thought I entered. This is the paper trading. I thought I entered Bitcoin. Oh well.
Hi, it's Andrew Ackerman with the Washington Post.
But
I just wanted to follow up on the
let's see here.
discussion earlier on fiscal policy. Your predecessors, Greenspan and
They all
Volcker,
sound like
spoke
AI
about
bots.
how
Is it my
we
mic?
Large budget deficits, endangered financial, economic or financial stability. Will you do that too? And
So can you hear them right now? Right now I have the audio output capture muted. Can you hear them right now? It might be picking it up from my mic. So if I don't say anything, let's see if it picks it up. So I think it's picking it, the mic's picking it up from the speakers, but I don't think it's picking it from the audio drivers. But if I do this, it's doing that, but I have to put myself on mute.
It's not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy.
So they're going to get a pay increase? Who's going to get a pay increase?
okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Everybody wants them to go. Everybody wants them to go. Wow. That's the second question.
In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So
the economy is in a very good place, guys.
To avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing we're meeting by meeting. We're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of neutral, a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is. And we're going to move carefully as this goes on so that, we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Raminovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all?
That's so crazy. Two people asked him about resigning. If they told you to resign, would you? Like, how horrible is that? Think about it. You're in a position and, you're having a press conference, at your job, your whatever, there's a team meeting and you're like the boss's best friend or whatever, in your high position, and you're giving out your speech about the company and everything. And then you have two different people ask you, well, since now there's a new owner, if the owner asks you to leave, would you do it? Or, if you got voted off the island per se, would you go? That's pretty crazy. That shows how much respect they have for that guy and how much, what he's done for just everybody. Like, nobody wants him because, one, he's always needing data, and two, it's always a balancing act. But I mean, if you think about it, you reduce the spending, what really got me was when I heard for the first time them say, we need the inflation rate numbers to go up. I was like, what? They need inflation to go up or unemployment?
What's your message to them on when they might expect relief?
So, you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example, and the world went through.
That's an oxymoron. Doesn't make sense.
Shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down.
How is it good then?
It takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow, at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
So in essence, they don't really care how we suffer. They just want the numbers to be good. So hopefully y'all like that, guys. We're getting back to the charts now. Bitcoin is doing its thing. It's been going up. It's been going down. One thing that I really do like doing is watching the FOMC press conference meeting and monitoring Bitcoin, because you'll see he'll say certain words and then they'll just start coming down. He'll say other words and then start coming up. So there's bots that are actually programmed to identify words and then either buy or sell based off of that. But right now, another all-time high, guys. We're just doing all-time high after all-time high. We are literally making history right now. Now, let's see here. I forgot who it was. Maybe it was Manuel. I think it was Manuel. Wanted to do some leverage trading. Let's do it, guys. Let's do some leverage trading. It's very risky though. Very risky. Give me a coin. We'll see how we can trade it. Either going up or down. Let's play the odds. Let's play the odds. All right, so let me go ahead and take off this camera. There we go. And let me put this back on over here. Awesome, good stuff. I appreciate everybody smashing the like. You guys are great. What do y'all want to trade? Do y'all want to trade Bitcoin? Do you want to trade LDO? Do you want to trade Radium, Turbo, Brett, SEI, SUI, DUI, DWI? I don't know why I always do CKB as CBK. Is there something CBK, like from a long time ago? I don't know. CBK. Is that a shoe brand or something, CBK? But anytime I do CKB, I always type CBK for whatever reason. All right, let's see here. We'll give it a few moments to see if we're going to do any kind of leverage trades. Let's see here. Now, as far as Brett goes, Brett, I mean, it looks nice. There's so many other nicer ones to do, though, as far as risk management goes. And I hate saying that because I do like it. Same thing with Gala. Gala's going right now. Gala's going, but I don't know. It's just this move. Now, the only problem is because of the bullish market, prices may continue going up and we may not get a retrace. And the retrace we do would be very little and insignificant until we do get a retrace. And by that time, that's when Bitcoin's coming down, and then these coins will come down very fast. So have a stop loss. Manuel says, I'm good with Brett since I jumped back in at 0.09399. Awesome. Very good. Let's look at Bitcoin. So dangerous with Bitcoin. I mean, you don't want to trade Bitcoin. You do not want to trade Bitcoin. It's literally flipping a quarter. Literally. Because again, all-time high, it can continue going up, or the FOMO, or, people can start taking profit and it just dump down. This right here would be the worst coin right now you could trade. Absolutely worst. Let's look at gold. And oh, I'm not in gold. Oh no, I am. Oh, but so I wanted gold to come down. Man, I wanted gold to come down here. I entered here. This is all paper money, paper trading. And then I saw it kind of curving a little bit. I was going to enter. I said, nope, I want it to come down. And then I can get a really nice entry. I think I was down as much as like 400, maybe even 5. I don't even know. This one, the euro, I was down like 500. But I bought some more. Again, this is all paper trading, so it's just pretend money. And then it lowered my entry, and then now it's coming up. S&P 500, I've been wanting to get into this one, but it's just way too high. I mean, it's just way too high. I woulda, shoulda, coulda, woulda. You know, I should have went in it earlier or been looking at it earlier. Crossing this level right here, I just missed out. And you're going to have that, guys. You're going to miss out on stuff, and it's okay, and don't FOMO. Let's say right now, I'm thinking about entering. I said, nope, not going to enter. And it goes up 50%. That's okay. Because it could have gone down 50%. Nobody knows what's going to happen until after the fact. But I do know that I have a much higher likelihood of it coming down than it going up. Strictly because, well, it's already made its move. Just wait. This one will be nice to enter, but I'm already in it, and I really want to see it come down further. So this one would be nice to enter. Ethereum already moved. You know, we missed our chance. Our chance. Get out of here. Get out of here. Get out of here, all of y'all. All right. Let's see here. We missed our chance. Where did we miss our chance? I'd say right here. You could argue down here, but I wouldn't have taken this trade down here. It's too up and down, up and down, up and down. I wouldn't trade it. Not maybe 25% here, but here definitely for sure. But I mean, already that straight up, too much. And now it's even more straight up, too much. This one's slowly coming up. That's Texas oil. And then Bitcoin. Let me see. Is there a coin that I want to do? I don't think so. Let's give it just a few minutes, guys. Let's do it a few minutes. See if anybody's still here. Let's do our countdown. 2-3 minutes. So if you do want a coin, let me know. Put it in the chat. Tomorrow we're also going to do a 2 o'clock. I'm kind of liking the 2 o'clocks. Now, granted, there's so many other people that stream at 2 o'clock. I'm really surprised I had this many. I really am. And thank you if you're watching like both streams or all 3 streams. The people who do this time frame. Maybe I should do a 1 o'clock. I don't know. There's a lot of really great people that stream all hours of the day. So it's like, when can a little fish get some of the food, you know? But I do like 2 o'clock though. Maybe I should do a 1. I don't know. I'll probably do a poll tomorrow, maybe. I don't know. Anyway, so we got about 2 more minutes. 2 more minutes. See if we got any coins coming up. If not, then that'll be the show. Today was a good show. You know, we had Bitcoin, covered Bitcoin. We covered some news. We also covered the crypto bubbles. We also covered, of course, the FOMC conference. 5 p.m. Eastern Standard Time. Bitcoin Plus. Is that so? It's always Eastern Standard Time. So would that be? Because I mean, I just don't want to do late. I mean, I've done 2 late ones at 7 Eastern Time, which was pretty cool. I got to do everything in the day, and then after I was done, then it's like, okay, now what? Because normally I'll do stuff during the day, I'll do my live stream, and then I'll do stuff afterwards. So it was just weird. So Eastern Standard Time, 5 o'clock. I did 5 on Saturday and Sunday. Didn't get a lot of people in. Man, Bitcoin just... Are we gonna see 80K this weekend? Man. So if you're in trades, I would recommend just moving up stop losses. For me personally, I would not have a target. I just move up my stop loss, or maybe, you know, take some at the target, but just keep on moving up your stop loss. Man, it's going. But yeah, I did Saturday and Sunday at 5 p.m. Eastern Standard Time. I did Monday at 7 Eastern. I did the other days at 2 p.m. Eastern. So we'll see. All right, guys. Well, tomorrow we're gonna do 2 p.m. and then we'll try 5 p.m. on the weekends. I don't know. I'm just trying to get more people, guys. I really am. I feel that we can help out a lot more people, but if they don't know about the channel, then well, they're gonna get bamboozled, in my opinion. All right, that's all I got, guys. I do thank you so much. I absolutely love the intro / outro. Granted, I didn't get a YouTube strike, which I was kind of afraid I was, knowing because it has a song in it, but I didn't get a YouTube strike. It just says I have to share the commission with them or whatever. So, see, I think we're gonna hit 79K. I believe you. Shoot, I believe you. So here we go, guys. We're gonna play the song, the intro song that I absolutely love and I can't get enough of. So here we go. See you later, guys. Thank you so much. Remember, don't FOMO. There's always another opportunity. Do not feel like you have to be in a trade. If you're not in a trade, just wait. Sit on your hands. Don't get jealous. Don't be envious. Don't have any of the emotions that most traders have. Be grateful for what you have. Be grateful for others that they're making money. Just relax. The price will come down. When it comes down, then you can enter the trade. Make sure to check in with me. I'll give you some non-financial advice. I'll give you my thought process on these coins as we do it every day. All right. So once again, my name is Joe. This is Trade Intuition. As always, let's make this money. And check out this video. I love it.
This election, I think, is going to decide the fate of America and the fate of Western civilization.
And they tried to the next president of the United States. Enough was enough. And I said, let Trumpomania run wild, brother. Let Trumpomania rule again. Let Trumpomania make America great again.
If you try to kill our citizens, we will kill you. If you spill a drop of American blood, we will spill a gallon of yours.
If you come back, we're going to kill you. We're going to give you the death penalty or kill you.
The fact is, and I'll say it now, you have to get him the hell out. You have to get him out. We will make America great again.
Oh man, I love that song. Good Lord. All right, guys, that's all I got. I do thank you so much. We'll see you tomorrow at 2 p.m. Eastern Standard Time. Bitcoin's coming down, but there's so much FOMO right now. So